Welcome back to United Real Estate Capital Corporation. Today is Saturday, February 5th, 2022. You might have noticed that the interest rate pricing has been steadily going up the last few weeks. Last summer, around July and August, I kept mentioning this to customers and consumers that we can probably expect a pretty good spike coming on the first, and so that's happening now. And what I mean by spike is that this is a spike in pricing. You'll hear people talk about interest rates going up, mortgage rates going up. What's actually happening is the cost for the various rates is going up, not the rates themselves. The same rates from a month ago, from 6 months ago, still exist, but they're more expensive now. So, like a 2.5% rate on, let's say, a $500,000 loan with the right amount of equity, you could have probably gotten that at no cost on a 30-year fix last summer. That same 2.5 today would probably cost, depending on where you go to get it, 15, 16, $19,000 or so just in points to get that. So it's a pretty steep jump. There's still great rate pricing out there. And when you think about it historically, we are still ridiculously low. If you can get a loan with 0 points, a 30-year fix, for example, with 0 points or no cost in the low 3% range, 3.1, 3.2, 3.3 or so, that's still ridiculously low. So kind of put things into perspective. If you're on the fence about refinancing, I guess the main thing I wanted to do with this video for purchase and refinance people was to give you a couple ideas to maybe help you out if you're kind of on the fence, should you do it or not, say on the refinance. Consider a no-cost option. If your loan amount is maybe like around 300,000 or more, you should be able to get a no-cost option. Smaller loan amounts, that's a little more difficult if you have like 100, 200,000. And what I mean by no cost is that the lender fees are taken care of, the title and escrow fees are taken care of, maybe county recording fees are taken care of, uh, just an appraisal fee, or maybe even get reimbursed for the appraisal if an appraisal is even necessary. So I'm talking about true no fees. That's something you could do if you're on the fence and you don't know, because there are people, a lot of people refinanced into those mid 2% range rates and low 2% range rates, but a lot of people did not. And right now, let's say you're sitting there at 3.5 or 3.75, 3.875, and you're wondering if you should do it. Well, if you do a no cost loan, you got nothing to lose. Even if you think, in your mind that interest rates might drop down later, if you do a no cost loan right now, you got nothing to lose. Um, that's not to say that it's not a good idea to pay some closing fees. In fact, in many cases, if not most cases, you will save more money long term by paying fees to secure a lower rate. But in this case, we're talking about a lot of people have gained a tremendous amount of equity over the past 3 years. And as a result, a lot of people are thinking about maybe selling, upgrading, or even downsizing, and they're not sure how long they're going to be in their current home. So a no cost loan would really help in that situation. Again, I'm talking about a true no cost loan. There's nothing hidden in that. The lender, whoever you're going with, they're not hiding something when they do a no cost. The lenders don't really make a whole lot of money on fees. They don't really care about those. I'm going to put a link to a different interest rates video that where I go into more detail on that. But lenders make all their money behind the scenes in the secondary market after the fact. They don't, well, I wouldn't say they don't really care, but those little bit of fees on there, that's really not that important. So when you're doing a no fee loan, it's not like they're hiding something secretly in the loan. Those little fees are not where they're making their true money. So anyway, I don't want to beat a dead horse, but a no-cost loan for you sitting on the fence, if you didn't get in on the lowest of rates, will do something. You can still save a nice chunk of money going from, say, on your $500,000 loan, going from 3.8 down to 3.3, it can save you a lot of money in interest and a nice chunk on your monthly payment. So talk to your lender about that, and don't miss out on what we have today, because at this point, the way it's looking is things can only go up higher. We're coming out of this artificially low priced interest rate market, and the way I see it, we can only right now go up from here. All right, so that's it for refinancing. And for you purchase people, purchase, of course, market is still hot right now, and don't let my opinion on this would, don't let interest rates deter you from purchasing the home. If your agent can get you a fantastic price on that house, don't let the interest rates stop you from doing that. Um, if you purchased just 2 years ago, you would see the tremendous amount of equity you would have gained just in that 2 year period of time. You might hear some of the talking heads on TV mentioning interest rates impacting affordability. Interest rates are going up, so you won't be able to afford that house. The thing that's really impacting affordability are the home prices, not the rates. I'll give you a quick example. I'll do this on my mortgage calculator here. On a $500,000 loan, I'm going to put in a 3.375 interest rate and a 30-year term. So that payment I came out with is $2210.48, $2,210.48. That's at a 3.375 interest rate. So I'm going to punch in 2.625 interest rate in the payment. So that's $2,008.25. $2,008.25. So we're talking about a $200 difference in the payment. Certainly $200 is a significant amount of money, but if you're purchasing a home and your loan's going to end up being about $500,000, let's say you're purchasing a $580,000 home, you're putting $80,000 down, you have a loan amount of $500,000, and $200 is a difference between you being able to afford it and being broke. You probably shouldn't be purchasing that home, right? The point is, the interest rates really are not impacting affordability as much as the actual prices are. So if you can get in on a good price, grab that. Getting an interest rate in the 3% range, mid and low 3% range now, with paying little or no cost, that is still incredible. I remember the days of doing loans at 8 1/8, 8 1/4, 7 1/2, and people were sucking those up. 3.125, 3.25, no cost loans. That's still incredible. So again, the point I wanted to make is don't miss out because you hear hype about interest rates going up. So they say. It's actually the interest rate pricing going up. Those rates are still available, so you can still pay a little bit of cost if you want to get something lower, or go with maybe 0 points and no cost, and you're still going to get something that's incredibly low historically. Thank you for watching this video. Hopefully it will help you on your refinance or purchase. Please visit United Real Estate Capital's website. Come back again, and thank you so much.